Oh, Canada. Yeah. All right. Banks. XFM, ETF, a basket of Canadian banks, Sun Life, Manulife, Toronto Dominion. I think Canadian Imperial Bank is there. Maybe Scotia Bank, Bank of Montreal, a whole bunch of them. Let's check out what happened, guys. I want to see what is the health of the banks in Canada. We had a nice top pattern here on the monthly candle chart. 12 months pretty much. Broke down, closed in October below. That's what it looked like. 12-month average starting to go downwards. Next month, sideways move, gapped up. Hard close below some more monthly defined support. Eventually creating a bigger pattern. And then next month, current month right now, we gapped down, but it closed back up above. Nice rally back up. Still under that monthly defined breakdown line, turned resistance below declining 12-month moving average, and the longer we stay below it, the more it skews down. And these are pullbacks within an overall downtrend. The month is not over yet, so let's see if that green is going to go down, and if it could close lower, then this sideways consolidation move, and that wick will just be noise from smaller time frames. If we zoom in on the smaller time frames, we might get a good risk-reward entry. And we're going to look at details, weight of evidence, to see if it's an appropriate time to enter on this pullback to the breakout line, the breakdown line. But right now, overall, when I look at the monthly candle chart, I'm looking for where's the trend? 12-month average is going downwards. Price action is below it. You never want to be long when the price action is below 12-month average. You don't want to short when it's above. Even on smaller time frames, it just baffles me there when I see people trying to play the uptrend, play an up move on a smaller time frame on the daily, but the weekly is trending downwards, the monthly is trending downwards. At any moment, that trend could bear on you. Bad news is exemplified. Good news is not as good as it should be. That higher trend, eventually, there's a reason the price action is below. There's a reason it's starting to pull you down. And until the price action closes above the 12-month moving average, and you still have the weight of evidence that you're in a downtrend, that this is just a normal pullback, you got to respect it. Same thing as you're in an uptrend, guys. You're in an uptrend. Are you going to short this downtrend here towards the 12-month moving average? Or are you just going to wait for that to be a pullback and then enter when you hit that 12-month moving average, and then it breaks out to the top? So most people, that's what they're going to do, right? They're just going to wait. They're not going to short it. They're not going to short in an uptrend. Well, same thing here. You don't play long in a downtrend. You wait. It could work, but why risk it? Why risk that? I don't get it. I just don't. All right. Weekly stage analysis. Oh, look at that. Stage 2, Ichimoku cloud starting to enter. Go below 30 average. Stage 3, consolidation, giving another go. But once you start having this erratic behavior, it's not the best. When you have continuation patterns later in the cycle, this is not the type of beautiful stage 2 that we've been accustomed to see. And the more you see them, this is just danger territory, short term. You don't want to play that too much. Sideways move, the cloud is thinning, that support is thinning. You're hogging that 30-week moving average. And then after that, break below monthly defined support. Right here, break below weekly defined support, break below the Ichimoku cloud. Stage 4 disaster in progress, guys. But XFN has been underperforming the SPX, but slowly not outperforming it as much. Will it start rolling over here and start reaccelerating its decline versus the SPX? So if you'd have to choose a short, this Mansfield relative strength indicator that Stan Weinstein used was really to make sure you choose the best. Relatively speaking, if you had to choose a short, well, you're going to choose the one that's the weakest against the SPX. Let's look at the volume. Some damage here. Ooh! Damage. Right there on this candle, on this gap down. And you see, don't overcome that easily, guys. You need a sideways move. You need a lot of time for that to be digested. This week, January 21st. This is the week in progress. A lot of red volume. Right there. Green volume, good green volume on that up move. So we're going to have to see how we're still below 30-week average, how that holds up. You're still doing higher highs, approaching that monthly defined breakdown line. There's some mixed signals right there. That volume's pretty nice, but now we're getting red volume on the small move here. What I like to do is I like to zoom in on the daily. Okay, so a lot of red volume, but not a lot of price action. Zoom in on the hour chart. So mixed signals, a lot of green volume here on the 1 hour chart, and also a lot of red volume on the down candle, kind of evening out. So I look at the volume when you zoom in on those daily, on the 1 hour, 4 hour daily. You get a feel for the health of that volume. You get especially the ones that aren't Marubozu candles that start having low wicks. You could decompose and see exactly that volume, the distribution of the volume. Is it on red moves or on green moves? That volume, how it's split up, and it gives you a health of what's happening in the weight of evidence. What else do we have? I want to compare it to the fast stock, guys. Weekly. Overbought territory, but what I'm looking for is their divergence. Did we have... There's some divergence right here. Just a little bit on the short term. Right here. Between these two highs. Lower highs on the weekly. Higher highs on the indicator. Saying potential elastic effect. The the energy has been building up on this rally back, and after that it's going to probably expand that energy on the way down, getting another push down, maybe all the way back here. There was no bullish divergence on that down move. Lower highs, lower lows on the indicator, lower lows on the price action. So it's acting strong. Some candles were strong here, so we're going to have to wait and see. We need that one weekly close that's red below these levels before saying, okay, I'm good to go. We could wait for the end of the month. Remember, these are... Wow, look at this scribble spat. This one. If we could close below that monthly defined breakdown line, that'd be even better to really stay behind that. So I would wait for the end of the month, guys, for XFN. So that pullback was strong. The positives for that pullback is that volume on a few of those weeks that had some good green volume. But other than that, we're still below monthly defined support. We haven't done higher highs on the intermediate. We have bearish divergence with the stock. Do we have bearish divergence with the RSI? I think we do. Same thing here. Bearish divergence with the RSI below 30 average. So strong pullback, strong volume. Let that dissipate. Let's see where the market wants to take it. But we're still under key levels here, and this is opportunity probably to short on the way back down, more than start thinking that this could go upwards and go through all this resistance, overcome all that weight of evidence that it should be going back up, guys. All right, that's it for Canadian banks. Let's keep an eye out on for what you